Hello, everyone. Welcome to the Truth About Real Estate Investing show. Happy Lunar New Year to everyone celebrating, and Kong Hei Fa Choi to my fellow Chinese. I wish you all a prosperous year and good health. That and happiness. I think we should do this regularly. Wish each other prosperity and good health and happiness. There's way too much anger and hate out there, in my opinion. Uh, those things are reasonable responses once in a while, but let's wish each other at least happiness and good health. Otherwise, let's not wish anyone to be harmed. Anyways, if you're not happy, then you got to make a change. Hang out with folks. For example, a friend of mine is pretty bummed out these days. I think he's been watching too much of the news. So I invited him out golfing. So we're golfing next week indoors. Anyways. So hang out with folks. Highly suggest that you hang out with folks that make you happy, or travel somewhere that does make you happy. Shout out to my friends who made their way to Florida or other warm places like southern Spain. I know some folks are in southern Spain, some folks are in Costa Rica, so that they could live their lives on their terms. We may not agree on many things. Like for a lot of them are left town for like mandates and whatever other reasons. I personally still love it here in Canada, even though it has many imperfections. But I honestly feel bad for my friends who feel that they have loss of personal freedoms. So they're doing something about it, which I'm happy for them about. The list for me of people to feel empathetic for is long. Frontline healthcare workers, folks who work in our hospitals and intensive care units, truckers facing loss of employment, teachers, police, victims of racism. The list goes on and on. I can't do something about all these problems out there, but you know what? If I see a healthcare worker or a cop in line at Starbucks, you better believe their drink's on me. But on a larger scale, not even call it a larger scale, but most of my energy is focused on who I can help and who I choose to help, and that's children living in poverty in Hamilton, Ontario, and that's the whole point of the Hamilton Basket Brigade. My point is that I've made a choice to do something about a cause that's important to me. I can't do everything for everyone. Thoughts and prayers are great. I need to do more than just that. And no different than my friends who've made those moves. They're doing something about it. They're taking action. Like my friend Rob Brake, who was on the show just a few weeks ago, he moved his whole family to Costa Rica. He even sold his home. He doesn't know when he's coming back. So my point is, if you don't like something, do something about it. Preferably morally and ethically correct, right? If the cause isn't worth the time and energy, then move on and invest your time and energy into something more productive. Cherry and I also enjoy, other than charity work, we also enjoy guiding hardworking Canadians, showing them practical, repeatable methods to create wealth. Hence, we'll continue to educate ourselves so that we may share with all of you. For example, with cash flow being harder than ever to achieve in real estate, Cherry and I started Stock Hacker Academy. Doesn't mean we stopped buying real estate. Our plan is still to buy a house every year. We bought 3 properties last year, real estate in our names, big mortgages and whatnot. But about Stock Hacker Academy, as part of our beginner's course, I only just found this out recently, so I'm really, really happy about it. Our students receive the transactions, so they receive not recommended, they receive the transactions that our instructor does, right? So they can trade along with our lead instructor, Lee Lowell. And in reviewing the performance from 2021, he sent out to our beginners 31 trades. 30 of them were profitable. So 30 out of 31, that's an over 96% success rate. Annualized, that works out to be a cash on cash return of 12% using an ultra conservative strategy, right? Ultra conservative, that's the way I like beginners to learn. No different than all of you learned how to drive. You learn to drive ultra conservative, and then you can take it from there, right? This is exactly what I wanted for our beginners. Keep them out of trouble, preserve capital, all those good things. Stock hacking to me is the same as private lending is to real estate. Owning real estate is the best, in my opinion. That cash flow doesn't work for everyone. So that's why a lot of real estate investors I know, they do private lending. They lend their money for consistent cash flow. Personally, I don't private lend. I don't like the amount of administration work, the due diligence required for each deal. And there's too many stories of deals going sideways, way more than I'd like. If you don't believe me, just wait for the news. There's probably a couple pieces of news of some sizable companies getting into significant trouble. And then if you don't believe me, go Google Fortress, go Google Pinnacle, go to Google Tier 1, right? Lots of more companies have had issues. And if you've seen, like, for example, like there's developer stories, like condo developers, for example, and they go bankrupt. What happened to all the private money that was lent to them, right? There's no money to go around. It's not going to be pretty. Anyways, back to stock hacking. back to stock hacking. I personally want something more liquid in my life. I have a lot of money tied up in real estate or my private equity investments. They're tied up for years, right? 5 years or longer. Anyways, I want something a bit more liquid and diversification outside of real estate. I'm already heavily invested in real estate. I'd like something outside of that. No different than crypto. I want something outside of real estate. And the funny thing is, even with my stock hacking, I still invest in real estate companies like McDonald's, eXp Realty, Airbnb. None of this is advice, folks. I'm just sharing what I'm doing. Past does not predict the future. For advice, please seek professional advice from a financial advisor, one that preferably makes you rich. If you know one, please introduce me. I'd love to meet one. If you don't, well, maybe you'd be interested in my free demonstration on stock hacking. It's a more detailed version of the demo that I gave my kid cousin. He's a music teacher. He returned over 50% last year. He takes a little bit more risk to get those rewards, but it's possible. Of course, I highly recommend that people start doing something very conservative first. If you're interested in a free demonstration, go to www.stockhackeracademy.ca. In the top right, there's a click. You can click free demo and register yourself for the next demo. And at the demo, I'll have special bonuses that we don't make available publicly for all my favorite 18 listeners. I think we're about 21 now. And this is the last demonstration I'm giving before our next 12-month program begins on February 25th. And of course, our program features 2 best-selling authors, one in Lee Lowell and 6-time best-selling author Derek Foster. Hope to see you there. On to this week's show. As always, we do our best from time to time to bring you leading authorities in investing. And as always, and today I wanted someone to talk about investing specifically in Alberta, who happens to also invest in apartment buildings. You probably know him, maybe you don't. His name is Pierre-Paul Turgeon, and he has 160 doors valued at over 22 million. Before he was an apartment building investor, Pierre-Paul was formerly at CMHC as the underwriter. So he was the financial expert who reviewed the financials for apartment buildings and apartment building investors to decide whether or not CMHC would insure their mortgage so that they could buy apartment buildings. So he's very well versed in this business. He's knowledgeable, of course. In the show, he doesn't pull any punches. So apologies in advance to anyone he offends. Please don't take it personally. Definitely don't sue me. My opinions and the opinions of the guests are of their own. Pierre-Paul shares his research, where his research went wrong before the most recent oil crash, and then the pandemic did not help. The challenges in operating apartment buildings during these times, where Alberta, the apartment building market is going, the silver lining of having a major fire in one of his apartment buildings. Everyone was safe as far as I know, including his daughter who lived there. How he's currently renovating for the new wave of tenants. Apparently the tenant profile has changed more recently, so he's changed how he renovates. He'll share how he's doing that. And in general, Pierre-Paul has lots of tips. So listen close if this is a subject you're interested in. Please enjoy the show. Bonjour, Pierre-Paul. How are you today?
I'm great, Erwin. Good to see your face and to be here with you again. Once again, it's been a while.
I know, it's been too long. And so my natural question is, what's keeping you busy these days?
Well, the opportunities in Alberta to invest in real estate, because guess what? The pendulum has swung back the other way. So I'm looking at making new acquisitions in 2022, actually moving pretty fast in that regard. My skiing, we have an amazing ski season. I was at Lake Louise on Sunday. I'm going to be there for a couple of days, a little romantic trip with my wife, probably stay overnight in Canmore. I had a great hunting season in the fall following a very difficult event. We had a death in my family, my younger brother, 53 years older, when passed away. So after that, we really needed he was a hunter too. So, but I had a nephew that flew from Quebec. We have this amazing log cabin on the rancher's land in the mountains, and we got 4 deer. I hope I'm not scaring anybody in Toronto that doesn't understand the concept of hunting, but it's all organic. And I make a mean carpaccio with that venison, I tell you, and sausages and venison burgundy. So that's what is keeping my family. The kids are growing. We have only one left at home. The other two young adults, one graduated from university. He's trying to find fortune in Eastern Canada. He went back to Quebec looking for a startup company in environmental. He studied environmental sciences. My daughter's graduating from sciences at U of A. She lives in one of our multifamily properties in Edmonton, trying to get into med school, which she will. I mean, she did the MCAT last summer, did very well, but as you know, you got to do it right at a few times. And then our youngest, 17, graduating from high school. So soon we'll be empty nesters. I know this is years away for you, but there's not a boring moment in life. That's all I can say, but it's fun. It's fun.
Oh, it's a mouthful. Sorry about your brother.
Yeah, you know what? Let's do that. Do you remember, I always carry this rock, right? People know this probably. My gratitude rock that I picked up from the shores of Lake Titicaca in Peru on an adventure trip with my oldest son, the one that's graduated. But I also carry this. Memento mori. This is from the Stoics, right? Remember your mortality. 53 years old. He's always had issues with his stomach, but anyways, we were in Quebec when he got hospitalized, and they discovered a mass in his stomach, and 2 months later he's gone. So I tell you, that's it can happen to any of us, when you don't see it coming. So enjoy life. Tell your loved one you love them, and hug them, and live, because you just never know when your turn is going to be up. So that's my 2 cents worth of philosophy and stoicism for you.
Again, I'm sorry. I have a brother too. I have a sister too. I should probably call him after this.
I tell you what, Erwin, my dad passed away 3 years ago, but he was 91. It's kind of all right. He was tired of life, but your younger brother, ouch, when you go and see him in the hospital with, being too fed and stuff, and it's the last time you're going to see your brother, the last conversation, ouch, it hurts. So enjoy life, you guys. You just never know what can happen out of the blue, a car accident, anything. So, and I live by that. That's why I carry this gratitude rock with me every day, right? I just don't take life or anything for granted, your loved one. So my 2 cents worth of philosophy.
Before we dig into things, how important was gratitude over the last 2 years or so? Because nothing really happened in the last 2 years, right?
Well, gratitude is a lifestyle to me, right? I'm blessed like you. I'm well traveled. Maybe people in the audience, some of them may know this, but I've traveled all over the world. I've learned a bunch of languages. I'm highly educated, but I always carry with me that understanding of other less fortunate countries through my travels, whether it's Asia, Africa, South America, which we like a lot in my family to travel to. So there's misery, and we may complain and whine about the last couple of years, a year and a half of the pandemic, but it's nothing compared to some of these countries, right? So gratitude is this. I've had this in my pocket. It's beautiful rock here. I don't know if you see it, if I bring it close to the camera, but I picked it up from the shores of Lake Titicaca 6 years ago this March. So gratitude is quite an intrinsic part of my life. So I try to teach this to my kids. Very grateful. And when I do speak engagements, by the way, that's the first thing. Thank you for being there. So thank you for having me, Erwin. So there's my gratitude to you, and for people to listen. I don't think I'm such a smart aleck. I don't take for granted people listening to me and my thoughts for granted. It's a privilege for you and I to be here. So that's how I live my life.
Thank you, Pierre-Paul. I believe in gratitude as well, and especially being empathetic to people who have it worse than I do, like the person who's sitting in the ICU and who can't breathe, or the ICU nurse that has to care for these people, and they're
like
completely
my wife.
Understaffed. Right? Yeah, exactly. I have much empathy for them. Whatever complaints I have, I got nothing on that. Right?
Yeah. So. There's always, that's the law of relativity, Einstein, right? There's always worse off than you. So remember that. So it works.
Yeah,
It does
just
work.
down the
Yeah.
street. Sorry, we're gonna go to different countries.
Homeless people in the frigid cold that you've had in Eastern Canada, we had here over the Christmas holidays. Imagine being a homeless person.
Mm-hmm.
Well, no, I can't imagine that.
No.
So, but it's a huge part of my life. Like I carry this rock, literally these two things now, right? But and we can talk about death, but I know it sounds morbid, but no, it isn't. And you can say, hey, 53 years old, my younger brother, and he had 3 kids like me, has 3 kids. Why him? Well, it's called life. You just never know when it can happen to you. So it's and I'm getting older, like we all are. So don't take life for granted. Focus on what really matters. So that's a philosophy I try to live daily.
Mm-hmm. Well, this is a real estate show, so that's what.
Oh, is it? I thought it was a philosophy show, everyone. I guess we're in the wrong place. We'll start a new show. Stoicism show.
I think it is important, but yeah, that's I invited you on the show because I'm always curious. I'm just naturally curious. Oil and gas is a big part of Canada. It's a big part of what drives real estate in Canada. It helps reduce our tax liability as individuals because we generate revenue by selling oil and all these other things. And also I keep hearing buzz in the real estate community, even here locally, about people saying, I'm going to Alberta to invest. I see the migration numbers, the in-migration numbers, I believe it is, for like Edmonton and Calgary specifically are way up there. And, I wanted to invite on the show someone who's actually an expert on that area. I don't think I say it enough, but I'm just so tired of free mainstream media, and I think you are too. About all these opinions that that are just there to make people upset. Yeah. And oil being a hot topic for some people, it can be an emotional thing, but yeah, it is part of this economy for this country. So again, you mentioned earlier the pendulum swung. So can you actually, for the listener who doesn't know, when was the last last oil boom, and then what happened, and then where are we now?
The last oil boom was following the Great Recession, right up till 2014. The oil market was amazing. I forget now the price of oil back then, but do you remember the summer of 2008? Because when you live out west, you'll learn about the price of a barrel of oil, and I can talk about what the price is today. But back in August 2008, when I bought my first apartment building on my own, the price of a barrel of oil was $148 a barrel, which is super high, right? That's WTI, West Texas Intermediate, which is one of the few standards that is being used.
In US dollars?
In US dollars. Yeah. Today, what is it today? It's $86.93. That's WTI, West Texas Intermediate. Canadian crude, Western Canadian Select is $71. So there's always a discrepancy because we Canadians, we sell our oil to the US at a discounted price. So that's when things were great, right up till 2014, 2015, when the pendulum went to the oversupply kind of situation. Hence, the price of oil decreased significantly. You may recall during last year, it even went negative to a negative price. Oil, you had to pay for somebody to buy your oil. So crazy as it went, didn't last very long. But now the pendulum is swinging up to, like I said, in the vicinity of 86. So West Texas Intermediate is the price for the American oil, if you will, one of the benchmarks for the price of oil. But in Europe, in the North Sea, they use Brent crude, which is a higher grade of oil. That price is $88.78. But the discrepancy between WTI, West Texas Intermediate, at 86.93, and the Brent, which is a higher grade, at 88.70. So that gap between the two oils has narrowed significantly. And maybe we can jump to the punchline. All of you out there expect over $100 a barrel expect to pay a lot more for your gas at the pumps. We can get into the reasons why that's happening. But basically, we had an oversupply situation right up until, let's say, 2015. Too much oil was being produced, namely because during the prior decade, we had the shale oil boom or revolution, if you will, whereby they found a way to get that oil fracking, right, which caused so much oil to be produced by fracking. And that caused, and obviously production costs, technology improved and all of that. So production costs were decreased. And that just caused a major flooding of oil in the marketplace, which made the price of oil crash. So that's sort of, but now we're moving into a significant undersupply situation, going back to the pendulum analogy. We are in a position of undersupply of oil, and increasingly so, Erwin. Hence the reason why the pundits, and I agree with them, expect the price of oil, barrel of oil, at least in WTI or the other measure as well, Brent crude will go up above $100 a barrel, US dollars. So that's sort of at a high level.
Can you explain, go into more detail why the price of oil? And then, of course, we'll need to bring the implication to real estate. Because hopefully the listeners, all 12 listeners, not to getting too frustrated yet. We'll talk about real estate, folks. Please appreciate world economics matter for real estate.
Well, they sure do. So one of the challenges, producing oil takes significant investments upfront in the billions of dollars, right? It's not like just a tap you turn on or off and oil comes out. So there's several years of preparation to start producing oil. But since the price crashed, back in 2015, just to use that's about the time when it happened, producers stopped producing oil. Why? Well, first of all, you got the federal government of Canada and other governments and entities around the world that are just saying, well, we got to go green. We got to go green tomorrow. Right. And I'd like to address that, Erwin, because I think it's unrealistic, the expectations that our political leaders have in that regard. Then we have all the entire environment in Canada in particular was against oil production and increasing production and all of that. And by the way, demand for oil continues to increase, beyond anything else that we've seen in the past. So it's not a shortage in demand. But as the price of oil had crashed, as the political environment in Canada was not in support of increasing oil production, those companies left or stopped production. All right. So now we are in a position of undersupply. All right. Hence the reason why the price of oil has increased significantly and will increase significantly in the very, very near future. So that's for the price of oil. But appreciate it when, as you said, it's an engine of our economy, our clothing. Like it's 80% of energy use around the world is based on fossil fuels. So that's so construction, like to make a transition towards real estate. That's construction material. Like how do you get trees to build housing and buildings and cement? You need production of oil. So definitely we're in an inflationary environment, and it's going to continue to be so for a while yet. Inflation is a bit of a complex. No, it's not that complex actually, but there's multiple reasons for why this is happening. But when the cost of energy goes up, obviously everything is more expensive. They don't build enough housing, as you well know, in Canada, and building materials are more expensive. Getting products from the manufacturers, et cetera, et cetera. So real estate, you can only expect it to go higher and higher in Canada. So, and I feel for your children, my children, I'm not sure how they're going to become homeowners in this current environment. But then again, I own an apartment building, so I'm happy because I got to make sure that my multifamily properties cater to those young people, make sure that I have the right amenities that they're seeking, and make sure I do some nice upgrades and finishes to my units, because tell you what, more and more Canada's moving towards a society of renters. And most of the world is already there, like even in Europe, right? Most people are renters. They don't own homes. So that's and owning hard assets, we've heard it before. It's a great hedge against inflation. Why? Because as the cost of things go up, you can increase your rents. Ideally, although some jurisdictions like yours in Ontario, there's tight landlord-tenant legislations and moratoriums on rent increases. I don't know. Are they still in effect in Ontario?
Oh yeah, I can't wait to see the what the government thinks the CPI is that we can to you and what rate we can apply as a rental increase.
Yeah, and when is that coming out?
1.2%.
When is that coming out?
I don't even know. I don't pay attention to it. It's so nominal.
Yeah, 2% when
no, I won't even be 2%.
Yeah, when the inflation rate is 4.7% in Canada right now, right? Yeah. Well,
it feels higher than that, man. Pierre-Paul, I don't know about you.
Well, it's a game that economists at the Bank of Canada, right? Depends what's in the basket of the CPI, right? You know that, so they play with that. So I have only so much belief in economists. I'm gonna leave it at that. It's a bit of a game.
My rents were not in that basket. I'll promise you that.
There you go. Neither were mine. I hear you. Yeah, for sure.
Actually, just to share for the listeners' benefit, I had a tenant move out beginning of January. They're returning to Korea, where they're from, on their own volition. I think the rent for them was like $1,750, and now my new tenants are paying $2,300. Right.
Yeah, wow,
that's a massive jump.
Yeah.
Right.
And you don't have a hard time renting that at $2,300 a month. Of course not.
Within 2 weeks, we had a great tenant with a trucking job. So truckers they have lots of job security. If they want to work, they can work and make money. So
and he probably won't live in the apartment much if he's a trucker. Is always on the road, right? So he'll keep your unit in good shape. Mm-hmm. Yeah, no, I think Erwin, this is a major crisis in Canada. Like it's housing is a major crisis, and it's only going to get worse. And by the way, it's going to benefit us in Alberta because that's one of the few places where home ownership is still affordable and rents are lower. So I'm happy. That's, again, from my perspective, Alberta-based, pendulum swinging back in our favor. Thank God, because it's been a miserable 6 years in Alberta from a real estate investing point of view. Absolutely. But, it's going to be a more balanced market in the future. Yeah.
Balance is nice. I miss balance.
Yeah, well, and you know what? When I monitor what's going on in your neck of the woods.
Nuts.
And I worry about you guys. And I've had this conversation with both Tom and Nick Carrazza. Their parents were involved in real estate way back in Ontario, and they lost a lot of money. And I don't know how the story ends in your neck of the woods. It's I don't know. I'm inclined to say it's a bubble, but then again, if there's no housing and immigration keeps immigrants allowed in Canada keeps growing, people will do whatever they have and pay whatever price for whatever rental unit is available. So I don't know if the bubble is going to burst, but I don't know. I worry.
Yeah, it's crazy town. CIBC came out with a statistic that 1/3 of home buyers are receiving help. Financial help from parents, grandparents, whatever. I forgot the dollar amount was, but it was very significant. It was 6 figures, of course, for Toronto. Is
it immigrants in particular that get help from?
Didn't specify who.
Okay.
But that 1/3 of all home buyers are getting help. So that's what enables a lot of folks. And then I don't know if everyone's honest about it, if they're getting a gift or not to them, but CIBC mentioned that was a record as well. So it's that's a global thing for national thing as well. Like Vancouver, across Canada, 1/3 of home buyers are getting financial help. So I've actually been telling clients and people and anyone who will listen, we have the averages are available. So now go to parents or grandparents and hit them up for money so you can buy a home if you don't have one.
Well, that's the only way they're going to be able to become homeowners. I completely agree. But you know what the concern is there, right? We know that a lot of Canadians are over leveraged, have extended their finances to become homeowners. And like my belief, right, there'll be an announcement from the Bank of Canada next week, right, on the 26th of January about overnight lending rate increase. And I think they will have to increase it to rein in inflation. So do you imagine at renewal, if anybody, so that's the concern. And of course, my background as a former CMHC underwriter, I think about the renewal risk, if you will. And I worry about that. Right. I worry about that because they have to rein in inflation, and the only tool in the toolbox is increasing interest rates. So that's a cause for concern.
Yeah,
And,
like I said, I hope for balance because we had one offer this week, 35 offers on one property.
Crazy,
right?
Crazy. Well, you know what worries me is what I hear again from our prime minister wanting to rein in investors' investments in real estate. Are you not concerned about it? I am. That's an infringement on liberties, don't you think?
Like anything, we're gonna roll with it. COVID, roll with it. New mortgage rules, roll with it. Mortgage changes to investors, roll with it. We have no choice.
I guess it's a good philosophy.
Yeah, like I tell my clients, like if we give up 10%, like we give up like 4 months of appreciation.
Exactly.
Right. So it's not the end of the world, and people still keep wanting to come to Canada.
And that's it. And we do need immigrants to come to Canada, right, to help us get out of this deficit that is ridiculously high in Canada. So we do need, right? It's a scarcely populated country, especially like the further west you go, right? Outside of Quebec and Ontario, it's a scarcely populated country. So we do need immigrants. I welcome that, and as a real estate investor, I look forward to that. Absolutely.
Yeah. And as a taxpayer, I welcome other people to help pay this tax bill. Speaking of taxpayers, I'm sure some of them are ending up in Alberta. So can you share how, like, your view of the world, how it's driving your investment decision?
Well, like I said, for me, so I'm still Alberta focused. I think before we started recording this interview, I did look at some point at Ontario and the Golden Horseshoe, because as you recall, before until the pandemic, I used to have workshops in Hamilton, teaching people how to invest in multifamily properties. I do believe in the opportunities out there. I looked at some markets all the way from Hamilton to Niagara. But obviously valuations are really high, and there's a bit of a stampede. So generally speaking, I didn't see much of an upside. And the logistics, right? I live in Alberta, buying out there, and as you know, a lot of the housing stock in Eastern Canada and Ontario is really old. So you buy a multifamily property out there, you've got to oftentimes do some significant upgrades to it, and so you got to find the right contractor and all of that. And I thought the logistics was a bit more too complicated for my lifestyle, and traveling to Eastern Canada and all of that. So I believe that Alberta is where it's at for the reasons that I mentioned. For a number of reasons, it's been an extremely terrible, excruciating downturn that we've had in Alberta since, like I said, the downturn of oil prices in 2015 until they recovered last year, and they're still pursuing their recovery. And so I kind of did not buy anything, but now I'm in active acquisition mode. Why? Well, the price of oil is going up, but I also think that the world is starting to realize that Canada is a leader in reducing fossil fuel emissions, green gas emissions, because you need a lot of research and development capital to come up with new technology to reduce emissions. So what's happening in Alberta? We have the price of oil that's going up significantly fast. We have room for immigrants to come here. So, probably the figure, Erwin, last year in 2021, the federal government allowed 421,000 immigrants to Canada. the number is equally large in 2022, according to what I believe my understanding is that they're aiming at allowing such a large number again in 2022.
Yeah, more than 1% increase each year.
So exactly, but home prices, you just mentioned what they are in most of the country, they're the highest. They're extremely high. Where home affordability still exists in comparison to other parts of Canada, it's in Alberta. So I believe that if I were in the shoes of an immigrant, I got to pick and choose where there's labor shortages, although we're suffering from labor shortages everywhere. But definitely, if you're going to look at where I'm going to live, well, one of the cheapest places to live is Alberta. I mean, it's not the warmest climates, mind you. It's cold, but you get over it. You know, you learn to live with it. If you're an immigrant escaping from terrible conditions in your country, so I see that being a factor. Alberta, and I want to send that message out. Alberta is becoming a world leader in making that transition to greener technologies to reduce green gas emissions from the oil and gas. Like in the last 10 years alone, the oil and gas industry in Alberta has reduced its emissions by 30%, Erwin. And there's been a consolidation of oil and gas companies, like the smaller ones were bought out. And so what you have left in Alberta are the Suncor, the Canadian Natural Resources Limited, the MEG Energy. They are the largest and most consolidated oil and gas companies in Canada with strong balance sheets. And they created, for example, a consortium. That's some information I got here that I put in my investor report to reduce green gas emissions by the net zero by the year 2050, I think is the target, if I'm not mistaken. So there's money invested moving away from it. That means what new technologies have to be created. So you got the tech sector in Alberta that's growing fast. Of course, we have a high office vacancy in especially in Calgary. I think it's like over 30%. I know it's over 30%, right? So you got office space that you can rent cheaply. So we have the tech sector that's being developed in Alberta. So Edmonton has been declared the hydrogen capital of Canada. One thing that maybe your audience doesn't know, but out of the fracking, one of the parallel sort of sub products is lithium. What do you do with lithium, Erwin? You know that because I know you. Yeah. There you go, and I know you've ordered a Tesla, right? So and also carbon capture, because you drill holes, you can put that carbon back into. So Alberta, never underestimate entrepreneurship in Alberta. We've been in the dumps before, and I now include myself since I've been here for 20 years as an entrepreneur. The entrepreneurship and innovation in Alberta is bar none. And so from a real estate point of view, my job is to be ready. Despite the fact that we've had to give rental incentives to our rental units, and it's been tough. I'm not going to deny that, right? We've had because it's a smaller market than Ontario, Quebec, or Vancouver. It's a small population, but we've had to give rental incentives for the last 6 years to keep our properties occupied. Meanwhile, operating expenses have gone through the roof: property taxes, utilities, insurance. My gosh, that's another crisis that we have in Canada. I'm sure your insurance premiums have gone through the roof, like mine have.
But can you share, like, well, how much has your insurance gone up?
Oh my gosh! I wish I had that, because I put that in my investor. But some of my
inflation
properties.
Bucket? Is that an inflation basket by Bank of Canada?
I don't know if it is, but it's insane. It's a crisis, and it's some of that's caused by natural disasters like the fires in Fort McMurray, flooding in BC, and you name it. But
and the fires in BC.
Yeah, and I had like one of my buildings. You may or may not know this. Not last summer, the summer before, so a year and a half. One of my tenants left a candle lit by their bed, and the whole apartment burned, but the shell remained and the roof is still good, but otherwise the interior was stripped down. And so imagine my premium. I think it's an increase in the last 4 years. Obviously, there were some other increases, but in the last year alone, I think 50% increase since that fire. And it's none of my fault. So anyway, that's maybe for another podcast. But
tenant insurance didn't pay for it? The tenants
The insurance
insurance?
paid for it, but then my premium increased by 50%.
Mercy.
I have a brand new building, mind you, don't get me wrong. And so I'm going to be jacking up my rents because the whole building was, we had to evict all the tenants. Oh, it's a brand, and my daughter lives in one of those units, actually. And of course, I make sure she had a dishwasher, being my daughter, my only daughter. But no, it's a beautiful building. But,
so sorry, Pierre-Paul, the fire spread beyond that unit?
No, actually, it's the smoke. The smoke was so severe. I've never seen this before in my life. So thick, any hard surface that the smoke touched was completely destroyed. Like you couldn't clean that, remove the smell. And then guess what? They discovered asbestos in my walls and ceilings. And bam, the city of Edmonton said, well, your windows are not energy efficient. You've got to replace all the windows. And so it was, so no, it was, but so they had to take all the walls down because there was asbestos in the walls. So some significant abatement was required. It's all to my advantage, to be honest with you, in the end. But it was a bit of a hassle. But yeah, I have income loss coverage as well. So I kept having my income because that's mandatory. I suppose it's the same for smaller properties, rental properties, but for us, your lender will dictate what kind of coverage you need to put on your apartment, your multifamily properties, including income loss. So,
Thank goodness, income loss.
Yeah, so I was covered for 24 months, and of course, I took advantage of that to inject additional capital to increase, the finishes to higher standards. So it's an amazing building. I'm super happy. It's a brand new building, basically. So that's a big win for me. But so bottom line is, I believe in Alberta. Alberta's going to make a comeback. Like I said, it's from the price of oil is going up. It's going to be above $100 a barrel. Yes, if we're going to continue to have immigrants in Canada coming to Canada, like the federal government intends to do, I think Alberta will be an attractor for these people to come out west. So as a real estate investor, owner of apartment buildings, I'm happy to hear that. Then I can finally increase my rents because, as you know, we don't have a ceiling. We don't have tight landlord-tenant legislation here. You can increase your rents by whatever the market can bear without any ceiling, but only once a year. So you're limited to rental increases only once a year. But I don't have a problem with that. And
I'm pretty sure you're grateful for that. Just rub that grateful stone because we don't have that here.
Yeah, here it is. I'm rubbing it. The genie of non-restrictive landlord-tenant legislation. Well, it makes no sense. You know that, Erwin. It makes no sense. It's detrimental to the real estate housing stock, right? If you can't increase your rents appropriately, you don't invest money in your properties, right? So it doesn't make sense.
Yeah, it's a bad business. Like if you can't control your pricing, it's a bad business and no one's going to build it.
Well, and people are not going to put much money towards maintaining their properties, right? If they cannot increase their rents to keep up with maintenance costs. So yes, it's a major concern, and I don't see the end of it. CMHC came out with a new product. Well, it's kind of a revamping of a previous product that they had. It's actually going to be implemented in March, I believe. It's called MLI Select, MLI, I should say Select. And basically, if you, whether you're an owner of existing rental units, I don't know if it applies to smaller properties, 1 to 4 units, but at least for bigger stuff that I own, 5 or more units, if you lower your rents to make it affordable for a period of 10 years, you can find, I don't have that. I wasn't planning on talking about that today, Erwin. I don't have that with me, but I think it can go up to, I think it's 95% financing with CMHC or new construction if you make them energy efficient and all of that. So there's a new program that CMHC has launched. I don't think it's going to apply much to larger cities like Toronto or the larger centers like Montreal or Vancouver because rents are pretty high already. So I don't know if there's any room to increase rents much further. I don't know. But anyway, that's something heads up. I haven't looked at it in detail yet. I want to shoot a video, a vlog post on that in the next week or so. But people should look into this. They are multifamily owners like myself. Another thing too, Erwin, that policy change is very big that came in January of 2021. So just a year ago, If anything, if you buy apartment buildings and you go CMHC insured financing, anything between 5 and 24 units, now you need an appraisal.
They didn't before?
They did not before. I know it's surprising. But the reason, do you know why I didn't want before? Because they didn't want to be bound by market valuation, right? So that CMHC could arbitrarily pick a valuation that was always lower than market value. But it was causing a problem. It's been a source of a lot of discontentment from investors, right? Because you expect that they're going to base the loan amount they'll insure based on market value, but CMHC was notorious for not doing that. And now that they require an appraisal, the word on the street, it depends. They're giving you a valuation that's closer to market, but not necessarily. So it's very inconsistent across Canada. Well, that was a big policy change.
Interesting.
The other big policy change, since I'm on this topic of CMHC stock, but during the summer of 2020, when COVID began, previously, when you refinanced the property and you did an equity takeout, you could do whatever you wanted with the money. In July, I think it was 2020, CMHC said, again, I'm talking about my former job, right? As a former CMHC underwriter, they said that the use of equity takeout funds was now limited to buying another multifamily property or doing some renovations or paying out a construction loan if it was new construction. But paying back your shareholders or paying them back their initial capital investments is now prohibited if you go CMHC insured financing. So that's So that's a biggie. I got to tell you, that was earth shattering for guys like me, because that's one of the ways that we pay back dividends to our shareholders.
Yeah, without triggering taxes, right?
Exactly. But I don't know how well it's going to be enforced, because I don't think CMHC has the means. So anyway, just as an aside, these are some key policy changes that have occurred the last couple of years from a CMHC perspective. Yeah,
that's restrictive.
And it's not warranted, by the way, because apartment buildings, and I think that reminds me that you've asked me how apartment buildings fared during COVID the last year and a half. But they fared very well. Apartment buildings to this day are when they rarely default. So it's a cash cow for CMHC. So there's nothing warranting that kind of restriction on equity takeout funds. I think why they implemented it is back then, remember, interest rates dropped significantly at the beginning of COVID. And CMHC was hit with an onslaught of financing or refinancing applications, and they could cope with it. Like turnaround times to get a CMHC deal approved was 4 or 5 months. It was insane, right? And they still are pretty long. They're a little bit less now, but it still is a couple of months, depending where.
Sorry, what's normal? What's normal turnaround time?
Well, in my days, when I was still an underwriter, 4 weeks. Yeah, it's insane. So that's, this is the stuff I teach in terms of strategy, financing strategy. So if you're in a hurry, you don't go CMHC insured financing. You'll take a bridge loan, conventionally financed, and then do your thing, stabilize the property. Then you go and do a refinancing with CMHC, because you pay a lower interest rate, right? About 1% on average than conventional financing. So it's worth it in the end. Yeah. But upfront, if you're in a rush to close, like you said, you got multiple offer situation, which is fairly common. You gotta go a different route, not go CMHC financing, insured financing first right away. You gotta go through financing route, conventional financing route. So yeah, you gotta know these things. You gotta be in the know all the time, right? Because it changes all the time. So yeah.
Is the demand back for apartment buildings in Alberta? Are you seeing multiple offers?
It never stopped.
Never stopped.
Yeah, the demand for apartment buildings never stopped. So let me
over the pandemic never stopped. Even early pandemic, everything kind of paused in the early pandemic.
Well, everything was on hold because people didn't know which way things would go. But let me tell you how apartment buildings behave at a high level in Canada. So 96% of tenants continue to pay their rent. So rents didn't crater. Rents came down a little bit. Of course, the story in downtown Toronto and some condo markets, right? People left downtown to go move out to the burbs and stuff like that. So rents came down a little bit, but on average, not a significant rent decrease across Canada. Like I'm talking generically speaking across Canada. What else? No, hardly anybody defaulted on their mortgages for that reason, since tenants kept paying rent. So valuations fairly flat, and actually compressing. Cap rates being compressed, meaning values are going up a little bit, not significant increases. But I think now that most of us see light at the end of the tunnel, I expect multiple offer situations for multifamily properties. Yeah. But you kind of always had it in Eastern Canada, at least in GTA area. It's always been a very tight market, very competitive market. We don't have that yet in Alberta, but we have an increasing number of Ontarians and people from British Columbia, from elsewhere in the country coming to Alberta and Saskatchewan, I would say as well, to invest in multifamily properties for the reasons I said, that the pendulum has swung towards the better days, So, and myself, like I'm hoping to be in a position to write offers in the next few weeks, the end of February. So, yeah.
A friend of mine, pre-pandemic, bought an apartment building, 30 days closed, no conditions, didn't even see it. Because I think there was like 7 offers.
Where's that?
East of Toronto.
Yeah, that's
east
scary,
of Oshawa,
though.
I think. Obviously, folks, this is not a recommendation. Like, my
Definitely
lord, the amount of
not.
risk.
Definitely not. And all the risks are extrapolated when you move into the world of multifamily properties, right?
Yeah.
Talking of millions of dollars oftentimes. But I guess, it depends what potential there was. But your vacancy, what are the vacancy rate in GTA like? Is it even 1%? Not even, probably, right?
Outside of, I read this week, Globe Mail reported downtown Toronto condos are around 3%. So their rents are everything's almost back to pre-pandemic levels.
Yeah.
And pretty much everything outside of that is vacancy is like 1%.
Yeah, exactly. So, yeah.
So lots of pressure on prices for everything.
Yeah. Well, there's room in Alberta. Like I said, the housing is cheap compared to GTA and most large centers in Canada. Edmonton, official CMHC vacancy rate is about 7.1%, I think, but actual probably closer to 15. So just beware also some of these numbers. Sometimes.
Sorry, was that residential or commercial?
Well, I'm talking about my. I think it's both, actually. I think it's overall vacancy rate.
Okay.
So official CMHC stat tells you 7.1%. But in talking to my property managers who own not own, but manage thousands of units, it's closer to 15%. Hence the reason why I think that immigrants are going to come here.
That 15% is residential from your property manager.
It's multifamily mostly. Commercial residential, if you will.
Yes. That's what I meant. Like, not commercial as in like not like office or retail.
Yeah, no, definitely not commercial, like commercial or retail. Yeah, absolutely.
Wow, it's that high.
Oh no, it's been a pain, Erwin. The last 6 years in Alberta have been a pain.
And then how's it been for you as an owner, like to deal with this?
Hell, absolutely hell.
Any lessons to share?
Absolutely. When you play musical chair, the music sooner or later will stop. I want to be kind, but I find that I don't know how. Yeah, I'm outspoken, but I feel that. When I was investing in Alberta, when I started investing in Alberta, so that would be in 2004. Like I said, I'm a former Easterner that moved out west. I did not have knowledge of the oil and gas industry like I do now, and so I did not understand that the market risk is represented. Okay, and I find that CMHC, as a Crown Corporation, as a mortgage default insurance company, Crown Corporation, also underestimated that risk. Okay. I also feel, I don't know if you're going to edit this out of this interview or not.
You don't edit anything.
No, okay.
Feel free to swear and stuff.
You and I used to be RAIN members. I think that as much as you and I are both indebted to RAIN, right? I'm not going to dispute that. At least I'll speak for myself. I don't know if you feel that way, but I do.
Love Don Campbell.
Yeah, and so do I. So, but
Russell
I think
Westcott.
they failed us in that regard, in Alberta, at least to, because they kept saying buy in Alberta, buy Alberta, and I think they failed to really assist us in assessing the market risk in Alberta due to the fact that it's overly dependent on one industry, which is oil and gas. So from that perspective, in terms of lessons shared, now that is the reason why I monitor the oil and gas very closely, because this oversupply situation that we talked about at the beginning of this interview was foreseeable. You can see how much production is out there. What's the supply of oil out there, right? And so you could see that oversupply build up, right? That would lead to an eventual crash of the oil price, which all of that happened. But I don't recall when my butt was still sitting in a cubicle at CMHC, anybody take into account that risk factor about the marketplace in Alberta, or rain for that matter. So guys like us,
in their defense, their money was all there too. Like they were all invested heavily in those areas.
And a lot of people got burned. And I have to name people, but who?
Lots of people got burnt. I know lots of people personally got burnt.
Yeah.
So I didn't
get. They meant well, but I don't know. So am I out of line?
Spots.
You're not going to edit this out of this interview, or what? I'm okay. I'm within proper norms in saying what I just said.
I think it's fair, right? It's not like I think they were just as caught off guard as everybody.
Yeah, but they were, when you get up on stage and you're the leader, or when you're an institution like CMHC, you got a leadership role, right? So I think, like I said, I find you won't catch me. That's why I'm very bullish on the market in Alberta, because I know what I won't do again. I won't repeat the same mistakes. Mm-hmm. Namely, the one mistake that I've made, to be very specific to in terms of the lessons learned. When you think the music is never going to stop, because we had values appreciating like crazy, right, in Alberta, because there's no rent control, right? And but if you don't take into account the volatility of the oil and gas economy, then you get caught. So for me, it's been, unfortunately, most of my properties, I've had to do some additional capital injections to keep them, because, like I said, it's such a small market that you're competing in Alberta with large landlords that have deeper pockets. For example, now if they're going to install vinyl plank flooring, they buy wholesale from China. They have a warehouse. So I'm talking about the REITs, right? Sometimes that I compete against. And one particular competitor of mine, a REIT, has even bought back a lot of his shares. So he has money, a lot of money. I have to compete against that. So when vacancies increase, if I want to rent my units, I have to compete with that, REIT. And so in order to fill my vacancies, I have to provide rental incentives. So what we've had is decreasing rental income, whereas operating expenses were increasing, like we mentioned earlier, insurance, property taxes, utilities, you name it, everything.
Labor costs, everything.
Labor costs, cost of material, like the hardwood, not the hardwood flooring, but the vinyl plank flooring or countertops and all of that. So decreasing income and increasing operating expenses. So that's not a winning business model here. That's what we've been facing. So what do I do now? I would be much more conservative. Not that I never jacked up financing to the maximum necessarily, but knowing that Alberta, being over-reliant on oil and gas in terms of income and attracting, tenants and so on, is so volatile. I would certainly not go higher than 70%, maybe even less, to be honest with you, so that you have a greater cash flow, less financing, producing a greater net cash flow to sustain or to withstand economic shocks that we've had. But this being said, so in all fairness to Rain and CMHC, my former employer, what Alberta has experienced in terms of downturn since 2015 has not been experienced ever in Alberta's history. So it, as much as maybe they could have foreseen the oversupply of oil and the crash of the price of oil, It's also a historic event caused, like I said, by the revolution of the shale oil, which created a surplus of oil, in the market. So,
right. And lots of smart people are caught up in that too, and that's actually a great point and a great example of where fundamentals, the market prices did not reflect fundamentals, because I remember hearing stories about apartment buildings like doubling in price in just months in Edmonton, for example. And like my point is the fundamentals did not, that price was not deserved based on the fundamentals, and then of course it fell apart, which is no different than like we see many things like but certain like the growth sector of the stock market, right? Again, the fundamentals did not make sense, and hence the stocks are coming down hard, right? It's the same thing. So
but Erwin,
people need to watch these things.
but back then the fundamentals did look very strong. Like the music was playing, everybody was dancing or acquiring apartment buildings. You know what I'm saying? It's just nobody foresaw that the music would stop.
Yeah.
So I'm being very candid here, but you know what doesn't kill you makes you a stronger investor, and that's exactly how I feel, and that's why I'm very excited about this new sort of phase of my investing career, because now I know better, right? And I'll do better accordingly. But back then, I mean, you're right. I bought a building from people who bought it. I'm going to give you numbers. They bought it for $100,000 a door, 24 unit. My first building that I bought on my own.
That's a nice. Must have been nice then, right?
Yeah, but get that. I bought it from them, so they paid $100,000 a door for this 24 unit building. And 4 years later, when I bought it for $1 million more in 4 years. $1 million worth of appreciation in 4 years. So yeah, because there's no rent control in Alberta, so that's a pretty smoking good deal, right? A good investment, right? But then the music started to slow down, and then it kind of stopped.
Yeah.
So and people out in your neck of the woods should be mindful of that. When we talked about some of those risks, I don't know how it's going to pan out in your neck of the woods as well. Like the increases that you've seen in values. Wow, what is it? 27%? Is that what I saw year over year?
Yeah, I think
that's insane.
I think both Toronto and Vancouver were about 26 or 27% last year.
Don't.
Yeah,
again, the music can always stop.
That includes condos. That's not just like I focus on detached homes. So I have land, right? So that performed better last year. Yeah.
But you always got to be mindful of that. The music, doesn't matter which market you're investing in, can always stop. So, and it's a bit of a bummer when you're an underwriter. My job was to assess risks and mitigate risks, right? But I had that one component of the market risk that I did not understand, and my employers, CMHC, did not understand. And I feel like Rain kind of underestimated that risk as well, or didn't go too far in their analysis of that risk factor. So it was a bit of frustration, but my buildings are I put the money in because, and I think this is something that applies across Canada. Tenants, like homeownership is a pipe dream now. Most, young people will not be able to be homeowners. I hate to say this, but that's the reality. I don't think that the federal government, provincial and municipal governments are going to get their act together, their shit together, and they're going to build enough housing for many years to come. So I think you need to understand that the rental market is changing, and you need to cater to those tenants that are up and coming in large quantities. So I do a good job at upgrading my units on tenant turnover because I'm ready for that next phase that's coming. But I think this principle applies across Canada. People want nice looking apartment buildings with modern amenities and, modern looking and all of that, proper lighting, security cameras, and optic fibers is what I have in my buildings for fast internet. So my daughter lives in one of my buildings in Edmonton, and, she's got faster internet than I have. Speaking of which, I don't have it going, but you know what? Our friend Elon Musk, I have Starlink because I live in the country. So I have a satellite dish, which I'm waiting to install because I need something to put it up on my roof.
Yeah.
But anyway,
you're supporting the enemy. I tease.
Is that the enemy? I thought he's my friend when I'm not here because my internet speed is not always the best, especially when I teach my course. So that's a problem solved. But anyways.
I tease.
Yeah. No, it's okay. But I think people need to understand tenant needs are changing, really. And technology has got to be integrated. So I'm aware of that, and that's what I do with my properties.
So you mentioned fiber optic. What other technology? You mentioned lighting and security cameras.
Yeah, security cameras and fire alarm monitoring and all that. Like especially that building that burned. So I had the opportunity to do everything from scratch. So and it actually it's in the university area. But everything from submitting a request for maintenance, everything should be on the cloud, automated, and no paper and that kind of stuff. Pre-authorized payments, which I think most of us are on it. So using technology at large, you gotta follow those trends. You gotta go there because that's what younger generations are expecting. So, yeah.
And then just some minor details, like appliances. Are you doing stainless? Is white or black fine?
Sometimes I am. It depends where the property is located. If it's a student area, not necessarily because I can't get more rent for that. But the flooring is important. People don't want carpets anymore, right? And I think all my buildings, no exception, have balconies. And that's something that people discovered also during COVID, the studies that were done, what was happening to the rental market. People working from home, if you got an extra room, a den that was in high demand, or a gym, something like that, the amenities. Some buildings I've done stainless steel appliances. If it's not a student kind of area, definitely stainless steel appliances, absolutely.
Mm-hmm. Stone countertops?
Not in my buildings, but this is something when the market turns around, because we're still not there quite yet in Alberta, but I expect that by the end of this year, we should start to see some positive changes. I would consider that, absolutely.
Mm-hmm. Everyone's got air conditioning?
No, in Alberta, it's not a
mean?
problem as much as it is out east. So no, but that's something I know in Ontario that people do. Some multifamily owners do. Yeah. But in Alberta, it's less of an issue. It's a colder climate.
Got it.
Yeah.
Yeah, I remember when I was in Vancouver, not everyone has air conditioning.
Yeah. Well, you get the breeze from the ocean, right? So, but it can get pretty hot in Vancouver. But Alberta's a different climate than British Columbia, right? Remember, they're on the coast. We're on the interior, in the prairies, so much different climate. I don't have air conditioning in my house. I don't need it. I'm on top of the hill. I get a cross breeze. It's just beautiful. So I don't need it.
Sounds healthy.
It is. It is healthy. I don't know how you do it to live in the traffic and all of that stuff, or when I don't.
There's not much traffic now.
Well,
we're still in lockdown.
Yeah, but that lockdown is ending soon, right? This week, right? Or
next week, Friday next week. Yeah. One phase. Okay. We're into the next phase, so it's not everything. Pierre-Paul, sorry, we're running out of time, and I still have a ton of questions. I hope you don't mind.
Nope, go ahead.
What are you looking for in a building in terms of building and location? So, for example, at the beginning we talked about comparing, because I know Alberta buildings, they're built like after 1970, roughly. Like you correct me.
60s and up.
60s and up. Yeah. Versus in Eastern Canada, like I'll talk to Hamilton. There's some stuff from like 1880, and then our nicer stock is like 1950, 1960, 1970. Yeah. But you pay for that. You pay for the less old stuff. And so, what is your target property? Can you give some guidelines around that for folks who want to learn?
Always, some of the case studies that I use in my courses to show that I always look for a way to have an upside. If there's a way that I can increase my rents by, like I said, changing the amenities, nicer flooring and all of that, nice bathroom and all of that. Like to renovate a unit, I just approved when it's a 2-bedroom, it's $15,000. So that's, of course, prices have gone up, like due to inflation, especially construction material. But so if there's an upside, a way I'm looking for buildings whereby I can go in and increase my rents by doing some work upgrades to the building. And I look for ways to reduce my operating expenses. This is stuff, by the way, we'll talk about that later, but I'm going to have a series of master classes, free master classes starting. The first one is on financing your multifamily deals like a pro on February 2nd. People can go to my website, multifamilyinvestingcanada.com, multifamilyinvestingcanada.com, and sign up for those free master classes. Another master class that I have a couple of weeks later, 16th of February, is on the magic of cap rates revealed. And basically, your job as a multifamily owner, because when you own 5 or more units, the income is the driver of the value. So your net operating income. So I look for buildings whereby I can increase my best friend, which is NOI, net operating income. It's not your net cash flow, it's your income before you service your debt. So find ways to increase my rents, maybe add storage, which I have one of the buildings. That's what I'm planning on doing. Make sure that my rents are at least at market average. Then I look at the expense side. Where can I save money? I have a couple of properties whereby there was only one electrical meter. So tenants, in their rent, electricity power was included. Or when, do you imagine? They were not encouraged to save. So then I had a company out of Ontario, Priority Submetering, which is now Karma. They came and installed electrical meters to all the units.
Smart.
My electrical cost went down by 57%. And in my masterclass, I think that created, I talk about that example, it created a value increase of about, I think it's oh my gosh, I'm going by memory. I don't remember that. I think it's like $100,000 or $200,000 that the property appreciated.
And do you remember how much the upgrade cost you?
Oh, hardly anything. All I had
Really?
to pay, it's leased.
Was it subsidized?
No, I leased the equipment and the company for 10 years. So I'm in a contract for 10 years. And then I own the sub-meters, if you will. And the company charges an admin fee to collect the power bills from the tenants, because it's monitored. Like, it's literally, the company's in Ontario, my building's in Alberta, and they charge an admin fee like any other utility would charge you. That's how they make their money. So yeah, it's amazing. All I had to pay was for the electrician, which was like, I think something like $5,000 or $6,000. So another building of mine, or when if you got toilet tanks that are like 10 or 13 liter water tanks at the back, you pay for water coming in and going out, right? So I have a specially patented toilet installed that are 3 liter tanks at the back. So you look for ways basically to reduce your operating expenses and thereby increasing your net operating income. And then there's a wealth multiplier effect, or a big lift effect, as my old property manager would say. For every dollar in increased NOI, depending how compressed the cap rates are in your marketplace, for every increase in $1 increase in income, net operating income, property will appreciate somewhere between $16 to $25, depending how compressed the cap rates are in your market. So it doesn't take long for creating equity forcing. So I look for properties that give me the chance to do that. Then I look for properties in good neighborhoods where there's historically low vacancies with good amenities. All the same stuff. The fundamentals for multifamily doesn't change, when compared to smaller rental properties, 1 to 4 units, a single home or a duplex that you would rent, right? You want a neighborhood with appeal for people to be there, or university areas, or access to transportation. I have a few buildings close to the LRT or light rail train system. So that's what I look for.
It sounds like you're full of tips and tricks. And these are all in the masterclass?
Well, not all of these, right? I mean, it's focused, right? But they are in my course stuff. And by the way, I'm going to have a next workshop at the end of March 25th to the 27th. So it is intense. It's 3 days. And so that's going to be launching the marketing next week and master classes. So people can go to my website, multifamilyinvestingcanada.com, and see all of that stuff. And by the way, I'm moving away from these workshops. So people, I'm a bit surprised I'm having one already, but there's a wait list that keeps growing. So if there's a demand, I'll do it. But I've got different plans for 2022 in addition to buying more apartment buildings. And anybody interested in investing with me, they're an accredited investors with an income of over $200,000 a year, can reach out to me at support@multifamilyinvestingcanada.com, support@multifamilyinvestingcanada.com. We can talk. But I want accredited investors, right? Earn people that earn over a couple $100,000 that we can talk. If you fit or investor profile fits the kind of investor I'm looking for, your investment horizon matches mine, because multifamily is not short term, by the way. Very few people are flippers. So it is a 10, 15 year kind of investment horizon. So Yeah.
Can you explain to like the new investor who's looking to raise money why you focus on accredited investors?
Just because from a securities point of view, Securities Commission point of view, they're considered more sophisticated, and they make a decent income like that. They're considered to know what they're doing.
Mm-hmm.
So they're basically exempt.
Right,
but of course, you know the catch. You're not promising any specific return, but nothing is guaranteed in this business.
I can guarantee inflation.
You got it. You got it.
I need to
Definitely.
update the saying. I can things guaranteed: life,
Absolutely.
death, taxes, money printing.
Yeah, but I don't know about you, Erwin. I think you have shareholders as well. I'm quite picky with people that I want to invest with. Because it's a long-term marriage, right? It's not a short-term investment. So 10 to 15-year horizon is, the time that you need. So, but that's what I look for. Generally speaking, the fundamentals are not really different than for other smaller rental properties that you would want to invest in. It's the same. It's definitely the same.
Can we touch on the new business venture that you're interested in pursuing after the next masterclass is over?
Yeah. I'm getting my mortgage agent license, which is long overdue. So I'm pretty excited about that. As a matter of fact, you may or may not know, but I do train mortgage brokers. So it's about time I get my own license, right? Because essentially, I'm an underwriter. That's what I teach people to do, and that's what mortgage agents do. So pretty excited about that, to be honest with you. I'll be able to help my students as well. I just don't know at this point. I know I have a workshop in March 25th. But beyond that, I'm getting up in age. I mean, I'm still in very good shape, but I think being a mortgage agent makes complete sense for my own deals and helping some of my students and some of my shareholders, right? I can do our own deals, which I do already, by the way. I submit my own financing applications. I don't know, where is that here? You can't see that, but this is one of my deals. So I do my own stuff. So I am already doing the work as a mortgage agent, if you will, and kind of talking to some people, potential brokers that I could work with. But so that's something I'm doing in the next months, actually. So by March, by the time I do my next workshop, I'll have my mortgage agent license. So I'm excited about that.
So you posted, and you can service all of Canada?
Oh yeah, absolutely. That's
right.
Part of what I'm doing. Yeah, absolutely.
Please send me your coordinates once you have
that.
Because I imagine it's a different business. I don't know. Is it still multifamilyinvesting.ca?
But I'll be catering specifically to the area that I know. I'm not going to be a mortgage broker at large. So if you're interested in multifamily, I'll be your guy, right? Because that's my specialty.
Yes.
And again, it's kind of a way of still making a bit of an income and still being involved in the business, while at the same time slowing down, kind of thing. So I can't promise I'll have as many workshops. I'm just different phase of life, kind of. I'm not ready to retire, because I think as a real estate investor, I don't have any desire to ever retire, because we can do this forever. And I'm a long-term holder. But it's a nice add-on to what I'm already doing. It makes complete sense. I should have done it way sooner, to be honest with you. But now is the time where I feel I'm ready for it. So
if the building's in BC or in Halifax or Northwest Territories, then you can help them with that?
Yeah, that's what I'm getting. My license in Ontario and in Alberta, but I'm still exploring that. But yeah, I can work anywhere. Underwriting is the same. It's the same principles everywhere, like 4 key risk factors that you got to go through. And financing is financing. It applies anywhere in Canada. So that's my goal for sure.
Fantastic. Okay, Pierre-Paul, we're running out of time. So I want to leave some space for you to talk about whatever you want. And actually, before we start recording, like I'm not a fan of a lot of the stuff in the media. Like attacking oil is like an easy target for a lot of the media. Is there anything that you see? And then again, please, like without my prompting, say whatever you like.
I agree. We have been and we are manipulated with this topic of oil and gas and fossil fuels. We're too many people are drinking our politicians' Kool-Aid, and it's a shame. We need oil to make that transition. Like, first of all, I want to state my case. I'm an environmentalist myself. And I think that Pachamama, that's I think a Quechua term for Mother Earth, is in trouble. So I'm not disputing that global warming is occurring, but we have the lifestyle that we have in our world due to oil and gas, to fossil fuels. It's a physically impossible thing to turn off the tap overnight. So what
it's
I'm
better
urging
than whaling, which was before oil.
Exactly. But what I'm urging people is see beyond the false promises that our politicians keep giving us. This country is in trouble, Erwin. My heart hurts for Canada, by the way. We're very disunited and all of that, but we will need oil for decades to come. So let's have a dialogue, a discourse that's more balanced. We won't solve problems overnight. Electrical cars, and that's a pun intended to you. I'm just reading some stats here from a report here. A single electric car contains more cobalt than 1,000 smartphone batteries. The blades on a single wind turbine have more plastic than 5 million smartphones. And a solar array that can power one data center uses more glass than 50 million phones. I can go on if you want.
Hopefully they're all recycled.
They're not. Like the blades for windmills, which we have a lot here in southern Alberta, are not recyclable. They have to bury them. So just understand that the lifestyle that we have, that we benefit from, would not happen. But yes, we need to make a transition. But we're killing this country. We're killing the economy of this country. We are one of the richest countries in the world. Obviously, the third largest oil reserve. We have everything. Lithium, as I was saying, we have potash, as we know, we have copper, we have gold, we have everything, but we're part of the solution. So just don't drink. Going to net zero by 2030 or 2050. It's not going to happen overnight. We need the kind of capital that oil and gas companies have. So I just urge people to be more knowledgeable, read more about this, because, and I can see the pendulum is swinging now. It's nice to hear promises from politicians, but just to give you one, that Joe Biden, US president, killed a Keystone pipeline, right? That was going from Alberta to the US. On the other hand, he asked OPEC, the countries producing petroleum, to produce more oil to meet demand and keep the price of oil down. So completely contradictory. So watch for that kind of BS that's going around a lot.
Yeah.
And
these
honestly,
OPEC countries
watch
are
it.
Such nice folks.
But you will see the pendulum is swinging, or when people like blackouts in Texas last year that killed 200 people because the electrical grid froze and solar, so the pendulum is swinging, and we're headed for an energy crisis. I'm telling you that, like we've seen in the 70s. Do you know that in Europe they're short of oil and gas, natural gas, to heat themselves? I could give you more stats. I mean, maybe a different podcast or one, but just start reading about that, because the energy crisis is occurring in Europe, UK, France, Italy. Because as a result of depending having swung too much against fossil fuels, they're reopening coal mines or wind.
Didn't England run out of oil recently? Didn't England have oil supply issues as well? I remember
big time. The people in the UK, I have friends who visited UK last year. People don't know. People have to choose which room they're going to heat up and sleep in at night in some of the poor countries. This is no joke. This is occurring now. So because of the phenomenon that I said earlier, like for the last 6-7 years, because people were, bad mouthing the oil and gas industry, the oil and gas companies stopped investing in our production. Right now, we're in an undersupply position. Mexico wants to stop selling its oil to the US. They want to become self-sufficient. Well, okay, so that's a big chunk of US oil. Saudi Arabia is reducing production. So I don't know. Energy crisis, mark my words. If I can make one prediction, knowing what I know now, which I didn't know when I started investing in real estate back in 2004, we will very likely experience a similar kind of energy crisis that Europe is experiencing, and UK included. Yeah.
Scary stuff.
It is very real. Or when I'm not some kind of predicting bad things, it's occurring in Europe right now. Oh, I could go on, that's a different topic. But you've got the Russia, the Europe depends on natural gas from the U.S. from Russia, Nord Stream 2, like a second pipeline. And I'm not sure if you've seen the news lately, but there's a bit of a potential conflict between Russia and Ukraine, and Canada is obviously on the Ukraine side. So what do you think Russia's going to do to that pipeline? Just turn off the tap. I'm telling you, this is very real. This is not. I studied political science and international relations, right, 15 years ago. So that's why I wanted that kind of stuff. Very, very interesting.
It's a crazy world. Thank God there's no war here.
Yeah, exactly. We're in Canada, thank God, and all of that.
That grateful stone.
Yeah, absolutely.
Pierre-Paul, it's been too long. Thanks so much for doing this.
Let
me know when you're in town, if you ever come back in town.
I am in May. Big event, actually.
I know. I'm going. I'll have tickets. Yeah. I'll see us.
So I'll be there. I'll be there with Kevin O'Leary.
Fantastic.
Yeah, our friend Seth Ferguson. I don't have anything to promote yet, but yeah, it's coming.
Fantastic. All right, I'll see you there.
Thank you, my friend. Again. All the best to you and your family in 2022 and everybody listening.
You too.
Enjoy life. Remember, we're all mortal, right? You never know where your turn is going to come, so enjoy life. Cheers.
Thank you for listening. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy in a virtual free training class every month. Go to investortraining.ca/podcast to register for our next class. I publish an episode here every week, so subscribe if you want to keep learning from seasoned investors like myself and my guests. Again, if you're ready to learn the nitty-gritty about real estate investing, register for our next free virtual training class at investortraining.ca/podcast. Again, thanks for listening to the show. Talk to you next week.